Is it recording? Yes. All right. Hi everyone. Thank you for joining the webinar today. So we're going to have I'll say a bit different format, and there's a lot of content that I want to cover. So please take as much note as you guys can. And let's start with the disclaimer first. Oops. Yeah. So a lot of this result that I'm going to show you guys is not a typical results, and a lot of things as well about the stock market. A lot of past performance, it doesn't guarantee the future performance. So a lot of information that I'm going to share here is mostly is a general information and it's more education purposes. And you should perform your own due diligence for anything that we shares. So on the other side as well, anything that we shares, if you take any action on that, you are fully responsible for those action that you make and any outcome that may result. So let's start with uh, the first topic, which is as in I believe in January. So I share a little bit a few trade ideas. This is around the using the strategy that we use, which is the money maker from the free course. So I share a lot of ideas just as a gift as early of the year. So what happening is just want to show the possibility and what's the result of those trades. So in these trades, right, we share 6 trades, and this is roughly to give us a return roughly around the cash flow around like 7%. So this all those trades is expire within this 19th of February, and based on the strike price and based on the share price currently, so there's a lot of high possibility this all the trades is going to be expired worthless. Then that means we're going to pocket all those profits, right? So just looking that trade at the time, just doing these trades, I'm generating around like $6,581 a cash flow just for a month, right? So I want to show like the money maker strategy possibility as well. So if you look at the cash flow is around 7.05% in a month. So just a few possibility. Let's say you have a capital at $10,000, that's generate roughly around like $700 per month, right? And if you have $50,000, that's like almost 5 times, which is 3,500, right? And of course, if you capital is growing and bigger, right? This is let's say your capital reach to 100K, that's generating cash flow at $7,000 per month. So if you just looking at the strategy, right, just the money maker strategy, the money maker strategy is basically selling put options, and just using a simple strategy that you guys can do like every single month. This could be generate consistent cash flow, and this could be replacing a lot of your expenses as well, or covering all your basic necessity expenses. So and just like talking about the possibility as well, right? Just doing this strategy, a lot of people, some of the people that I know, able to retire from their 9 to 5 job just based on this strategy. So of course, in the total investor in our academy, we don't just use this strategy as a whole complete portfolio. So this is just a small portion of the whole portfolio. And just to be frank, this cash flow strategy we tend to use only like 20% of the whole our portfolio. Cool. All right. So moving on, just going through a few things on what's happening in the stock market recently. So I'm not touching pretty much not the global stock market. I'm going to touch roughly mostly around the US stock market, and especially around the S&P 500, right? So S&P 500 in the what we call like year to date, which is like from January 2021 until now, their return currently around like 6.4%. Just saying this, right? There's a lot of people like compare this with the Australian stock market. Australian stock market is currently performing year to date around 3%. And if you think about this, right, nothing, it's not right and wrong in terms of which country that you invest to. And at the end of the day, is you need to understand what company that you invest, what the business and how they're going to make money, how they grow. So then at the end of the day, you need to understand what's the investment that you make, right? So you need to understand, especially for the stock market, behind underlying of the stock market is all the company. So you need to understand what's company that you invest to. So if you really understand the company in Australian market, then go ahead. If you really understand about few companies in the US stock market, then go ahead as well. So mostly for me and our group, we mostly invest in the US stock market, and some of my portfolio is allocated to the Europe stock market as well. But yeah, so just looking in the current terms with the especially around that since 2020 until 2021, market has been going up, right? It's been going up quite aggressively, and a lot of news out there become make a lot of creating a noise, and people got a lot of concern, especially around the market at all-time high. So this is when you see this, if you see my mouse there, if we start breaking up and up and up, keep going up, this is the all-time highs. That means this is the whole stock market history. This is the highest point, and it's almost, I'll say, like every week we almost making another all-time high, and this is creating a lot of concern to many people. um, for a lot of people that are quite new in the stock market, this is where they start become worried. Then they read the news and everything, they start concerned about the market is going to crash. So I'm gonna share a little bit all a few techniques that I normally do in terms of to understand what's the whole market situation. And the first thing that I'll normally go through the what we call like macro outlook, and which is the US, the economic indicators. Since we going through the US, then I'm just gonna go through the US economic indicators. The first things that I normally look at is the unemployment rate. The US unemployment rate is quite straightforward. I think the name as well, right? This is all about the percentage of the people that doesn't have a job, like so still unemployed, compared to the people that still in active looking. So if you look at this in the past, in the 2020, around the COVID time, it does spike up a lot, like really, really high. That means there's a lot of people doesn't have a job and they got redundant and everything. But if you see that the trend after that with the stimulus and everything, and uh, the companies start doing well again around, I'll say around like April or May. So you start seeing the unemployment rate start going down, and especially around that November and December. And this is a bit of pause around that November and December, but this is probably also like lagging indicator around that holiday. Then after that, the recent update, which is around that January, so we can see that it's start following the same trend. So the unemployment is going down. That means a lot of people start going back to the workforce, and that means there's a lot of things that happen with that, right? So that means people like us, we start getting money, we start getting the income, and that means we able to spend. So from that point, and I start looking into what we call that consumer spending. So if you look at the consumer spending, yes, during the unemployment quite high, a lot of people doesn't have income, doesn't have job, there's not much spending. So if you see this is economic indicators that I'll say supporting the previous chart, which is the consumer spending. So the more people that spending with pretty much everything, right? So this could be like groceries, goods, or a bunch of services like getting the car service or even like cleaning and everything. So there's a lot of things around the consumer spending. So pretty much a lot of things, right? This is just a summary of all expenses that people make in the US. So in terms of consumer spending, it does start going back up. It does a little bit pause around that. So we're still waiting for the recent update. I'll say probably around that next week or next 2 weeks. So we should see uh, the new numbers for the December one. So if the unemployment rate is going down, people got more money, and expectation the spending will be start going up again. And hopefully by, I'll say like 2021, end of 2021, we might see that this trend as continue with from previous years. All right. So the other things as well, like if a lot of people when looking in terms of the economy, they start looking for the property market as well. So the more people that are quite feel secure with the employment and everything, they start buying a property, which is very common in any country. Apply in US as well. US existing home sales is crazy at that time. Existing home sales is, this is where the people that let me explain a little bit. So existing home sale is where people already own home, then it's not a new build. So after people live in probably, I'll say like 2 years, 3 years, then they sell that property away. So that transaction, what we call like existing home sales. So in last year 2020, right, it does drop like crazily a lot, and I'll say this is low closer to the what you call like GFC at the time. But since then, it just like look at that, right? This is like almost like V shape, right? This is like huge skyrocket up, and this is what we call like all time high for the US existing home sales. And in terms of that, it's just giving a lot of confidence in terms of the economy cycle from retail consumer, and people start spending, which is a good thing for in terms for the economy. Moving quickly, this is the manufacturing PMI. So this is just explain briefly. So this is where we start measuring in terms of the performance of manufacturing sector, and this is come from like 600 different industry. So if the just looking at this chart, going up means it's a good thing. So if you look at this, it does a huge impact in that COVID time, but now it's already back to a lot higher than the previous years. So that means production and everything's factory is still booming, and still very high output. And so just looking in terms of the economy wise, economy US economy is still doing well. I think there's still a lot of upside in terms of the economy, and the money circulation is still very high. So now the next thing that I normally do after looking the global the economy, I'm looking for these top 500 companies, right, and their recent earnings. So as you aware, in all the company S&P 500 especially, they do earnings almost every quarter. So different company have a different schedule, but mostly is quarterly. And in terms of quarterly, and they did recent announcements mostly around the Q4, which is a 2020 Q4. So this is the result so far, right? So all of this that you see the green, that means all those earnings that the people reported is higher than above the estimate. So as you well, like there's a lot of people that analyze and everything giving the estimate. Green, that means the company itself, their earning is higher than what people estimate. And we see here, there's a lot of greens here, right? But I'm just gonna give the number. 74% of the companies in the S&P 500, which is around that 370 company, already reported earnings. So that's up to that last week, last Friday. And from those companies, 296 companies, around roughly around 80%, have reported a positive EPS surprise. So these numbers is also is considered one of the third highest from, since this is a company which is FactSet, they're tracking this all the earnings, right? So that's roughly around that 2008 or 2009. So since then, this is considered one of the really good quarters from for the S&P 500. So in terms of earning wise, company doing really well, and for, isn't even like what happening in the COVID times, they're still performing, they're still delivering really high compared to the what people expected. So if we're looking in terms of a lot of company giving a guidance, which is they always, all companies, right, mostly they always give a projection. Hey, what I'm going to perform next year, what my projection net profit. So this is what happening. So they're just adding them all the S&P 500 company based on this from current year 2011 until 2019. If you see that they're still going up and up, which is really good. Yes, in 2020 expected is going down because of the whole COVID, but if they based on the projection in the 2021, we should go back to the trend of going up, which is all the earnings, and the 2022 as well. So some company give the estimate for 2-3 years ahead. So this is looks very promising in terms of their projection. All right. So if we, this is probably something bit technical here. So this light blue color is, this is the S&P 500 price. So the I'll say black or dark blue color. This is what we call like the forward 12 months. For 12 months is the projected 12 months net profit for S&P 500. So if you see this, right, so a lot of companies, a lot of based on the history as well, share price tend to move closer to this their forward EPS. And if you see this there's a gap before is closing in and is trending normally closer to that projection of 12-month EPS. Then this is even though they're going a lot up in around this 2018, they tend to go back closer to that forward EPS, right? Happening in that 2019, it just happened with the COVID, it just getting closer to that EPS. But if you see this is creating a concern before. The forward EPS is not following that share price. So that's why a lot of like few people giving a concern, a lot of big company giving concern like, hey, we could see what we call like a correction. So there's a market drop and everything. But based on a lot of information that we got, economy is doing well. The EPS, which is a lot of earnings in the current year and last year, 2020 Q4, and the projection, upcoming projection as well. And with the current share price in the economy and everything, it seems like I'll say like you wouldn't see the correction or like a huge bear market like what we see in the coffee time. So I'll say this: if there's a drop, then probably correction, a small correction, a small drop, five probably or to up to 10%. So not guaranteed in terms of the numbers. It's just my prediction. All right. So overall, not a huge concern. Market still doing what they need to do, and which is really good. And if we look back in terms of every year, right? So a lot of market that when you see all time high, this year is all time high, this year all time high. If you see the news, the only concern, this is probably a tips, right? You only want to start worry when everything in the stock market in S&P 500 become green. So literally every single week is a green. So that creating a concern. That means anything that you touch make money. So it's just psychological behavior, right? That means people doesn't care about risk. People just dump the money. So that's creating a huge concern. Currently, haven't seen that in the news and everything. So hopefully, um, not happening in any near time soon. If that happens, so definitely we're gonna give you update accordingly. All right. So any questions so far with the whole market outlook with the current situation? No. All right. Oh, by the way, so for few people that quite new in terms joining this webinar, so the process for us is quite simple. So if you have any question, feel free to stop me, and if you shy, feel free to type in the chat. Then I can answer that if I see them. All right. All right. So moving on. So last week or last 2 weeks, I got a guest speaker, Willie, and he shared a little bit about the solar industry. So I'm just gonna continue on that, right? So, but before going through too much, I'm gonna do a quick recap what he mentioned. Um, Mostly adoption of especially in the solar energy is been keep increasing, right? And as what he mentioned is in the in terms of the annual growth rate is closer to 50%. Is that means every single year has been increasing really well. And on top of that, this is very important, especially for innovative for new company market that are doing the disruption or innovation company, right? The cost of this solar technology has dropped more than 70% over the last decade. So this is very important, right? Especially for the innovative company. The cheaper the cost of the implementation of this technology, it make it easy for people to adopt them. So by the cost is dropping quite a lot faster than the adoption of this new technology, I'll say the upside is still very high. So that it got me really interested in this industry. So he really share about these top 10 companies by revenue, right? So this is what I noticed. Jinko Solar is one of the top one. The revenue is 4.6 billion. Also, is one of this is the highest from all of this company. And we got like Canadian Solar and Jinko Solar is based in China. And based on his survey that he got, China is one of the largest country that adopt that install all these solar panels, right? So 33% of the whole solar implementation in the world. So it's owned by the China. So Jinko Solar based in China. So it's very coincidence like, oh, that's got me interested. Hence I start digging deeper in this Jinko Solar. And they has the highest revenue, but what I see from here, they has the smallest market cap. So market cap is a just quickly, right? It's a total market, total shares in the market. So let's say you have 100,000 shares, and you times by the share price itself. So let's say each shares cost $20, and you have 100,000 shares, then it become like $2 million company. So that's quite straightforward in terms of market cap. So normally company that has a quite high revenue, the market cap tend to be quite high as well, but it's not happening with the Jinko Solar. So it got me interested with that. So I did quick research on that one, but not going through too much details in terms of what they're doing. But I'm just gonna share a little bit on how I evaluate them, so like the numbers that is the target share price that I got. So for the company that Jinko Solar, they're quite most of their revenue coming from the sales. They're selling the package, the solar panel and everything. So sales, which is the revenue, which become like one of the key driver in terms of their income. So that's why I use this price to sell valuation for this company. So price to sell calculation is very straightforward though. It's just a total revenue divided by a total market cap. So common sensely, price to sales should get to at least a one. So but Jinko Solar price to sell is 0.5. That means their revenue is a lot higher than what's their share, the market cap. And if we look in terms of the solar industry price to sell average, right? In terms of the average is around like 14.1, and that means there's a huge discrepancy in this, right? But for me, conservatively, Jinko Solar should be able to get into the price to sales to one. So if their revenue is high, the market cap tend to be matched them, right? So that's why I say like conservatively, they should be able to get to price to sales into one. So the way I calculate this, like just using all these variable, current price to sales is 0.5, and the current share price is $61. And we want to target price to sales to 1.0, right? So the question is, what's their future share price? So this is the formula. So future share price is the target price to sales divided by the current price to sales, and you just times the current share price. So we have the target 1.0 and divide by 0.5. Then you times that with the current share price, $61. And this is where you got like two times that, $61. So future share price for the Jinko Solar, if the price to sales got into the one, the ratio of one, so we should get that the share price into $122. So that's a more like the valuation projection. So but this is more the valuation of the fundamental valuation. So I'm gonna look in terms of the technical aspect. So this is Jinko Solar share price, right? So I draw a little bit here the white line. There's two white line here. So the white lines, this is what I call like psychological support. So this is when the share price going dropping, and if you see that it tendency to touching around that white line. So this is more like psychological line. So people when they see the chart, they say, "Oh my God, it's already dropped and it's quite cheap." Then that's why that people start buying, and they tend to be quite round numbers. So I put that as a $57. So that's the first support. The second one is where using our timing system, using that, which is this purple or fuchsia line. So that's around like $34. All right. So we got like roughly the projection share price, which is $122. And we got a few support that how much they can, roughly how low they can go down, which is a $57 or $34. So then that's where I got a few action plan. For options, this is very important, right? So Jinko Solar IV, which is implied volatility, or before that, IV is because we're dealing with options. Whenever we're dealing with option IV, which they one of the variable that I'll say if the IV is high, the tendency is the option price is quite high. So this is when we see IV is high, then most likely all the option price for that particular stock is quite high as well. So I so for us, if we see the Jinko Solar, for example, IP is high, that means if we pay for this option, buying this option is going to be expensive. Hence, if we selling option, it's become lucrative. When selling option, we receive premium, right? So we don't pay anything, so we receive premium. So when we selling them, because the IP is quite high, the option price is quite high, so that means we receive quite high premium. Make sense? So I've been here for Jinko Solar. If you see that, it's around like 92.9. So it's quite high compared to the previous years. So that's why I sound like at the moment it's still quite high. So I'm not plan to buy options for this particular company. So just a few action plan that I'm planning to do. So for Jinko Solar, planning to just buy the shares, and I'm planning to add only 3% as a starting point. Then after that, a few idea in terms of the cash flow. So Jinko Solar, we can do sell put for this next month expiry. 55 strike, you can get around like 6.73%. If you do this $50 put, which is around 4.3%. Remember, right? The technically the first support is around $57. So the one that I pick is below that support, so around like $55, or you can pick a lot lower a little bit, which is $50. So it's depends on your risk profile. So it's either way it looks lucrative. So let's say if you pick this, let's use this number, right? So let's say you pick this trade, right? So that means if I'm doing like quantity of 4, the strike is 50. So before that, sorry, 50 strike means you need a capital $5,000, everything times 100. So $5,000 in your broker account. So if you don't have $5,000, don't do this trade at all. All right. So let's say we do for a quantity of 4. That means 5,000 times 4. That means I need to have $20,000 in my account. So each this contract will generate for me like $215 for this one contract. So 4 is around like 800 somethings. So this is so that means you from $20,000 you generate that around that $800. So this is a quite good cash flow if you depend on how much your expenses, but definitely it's going to help a lot of people just to earn that $800 per month. Cool. So that's the idea mostly around the Jinko Solars. And I'll, yeah, probably don't have much time. Let me jump to the next one. Um, the next one is around the next booming industry that I was encountering, which is the one that I researched as well. So mostly it's I got a lot of like I'm gonna share a little bit a lot of in terms of the evidence of why I say this is the next booming industry. So this is all about the boom of semiconductor, right? Semiconductor, or what we call it chip makers, also are going to skyrocket in the coming years. Is due to like two things, right? So the first is high demand from many innovation industry. I'll share a little bit what innovation industry that helping this semiconductor industry. And the second reason is because there's a supply shortage from the manufacturer. So if you mix them, high demand, low supply, then there's a tendency that the price for the semiconductor, the chip is going up, right? And by the price of the semiconductor, which is the chips and everything's become more expensive, that means it's higher revenue for this company. So I'm gonna share the first area, which is the high demand. I'm gonna break it down a little bit. So high demand wise, deep learning. There's a huge growth, especially around the deep learning, as you see, like from like 1970s into like this 2020 to projection to 2020, 2030, right? So deep learning is where you start looking what we call like AI, the company that doing a lot of data analytics and everything. So the whole concept is when we start with the whole software, um, all of us as human, we normally tend to write the logic and everything, right? So a lot of with this evolution, with this progression, with the deep learning and everything, is going to help people to start making the code to write for you, right? So that's the whole concept that they want. So but all those code is written will be based on the data that they capture, and that's why like this is what we call like deep learning. So, and by doing this, right, so this deep learning technology, it helps with many other platforms or many industry. The first thing is with a lot of things that we see, because we heard about smart TV, we heard about smart speakers. So this all of them is powered by AI. So this come from this deep learning technology, right? And if you heard about like, all the self-driving cars, self-autonomous car and everything, these self-driving cars, a lot of the algorithm to pick whether that you turn left, turn right, or stop, or start, or the bunch of the whole decision making process is all comes from this all AI stuff, right? Deep learning again. And the consumer with TikTok, with Netflix, with Snapchat, with a lot of things that giving a lot of good recommendation here and there, that comes from this all deep learning technology. So by looking this all this a lot of industry that using this technology, right, it creating a boom in what we call AI chips. So if you see this from 2016, it's been the revenue, the chip market size, right? It's been increasing almost like I would say 50% annually, and 2020 is around like $5. So the projection that we have, and based on the research as well, a lot of people or research mentioned the data center spending on AI processor will scale more than 4 times. So the projection is from 2020, so you used to be have a market size that around that 5 billion is going to be 4 times into like 22 billions in 2025. All right. So that's one of the first industry that creating that demand, right? The second is where we dealing with this a lot of gaming, and 2020, which is interesting, yeah. Gaming industry got a lot of booster, right? And in 2020, especially with a lot of people working from home, surprisingly, the gaming industry, the revenues increasing as well. So, and this is a few reasons that people mentioned. Video games are becoming the third places away from home and work. So people spend a lot of time in this virtual gaming reality, right? So the first, this is a few things that I'm going to share. By increasing the trend of the monetization and the time spent that people spend in this virtual gaming, right, there's a chance of the in-game purchase revenue will increase more like compoundly 20% annually to next 5 years. So if you see these the numbers roughly, right, the revenue around like 130 billion there will get to closer to almost like 350 billion in 2025. So that's, I'll say like almost triple, right? Just by span of 5 years. So this is one of the industry that are quite booming. And the moving, the next thing is around the digital payment and everything is the Bitcoin trend, right? And as you heard with, just gonna share this in 2020, right? The reason is skyrocket really high because a lot of there's a lot of support around its network, especially around the Bitcoin and cryptocurrency, and we come and a lot of hedge fund, a lot of big companies start invested in them as well. So that's why like increasing the demand of this Bitcoin. As if you're not aware, Bitcoin, the way they're doing processing the transaction, they're using a lot of chips processing power. So the more transaction that happen, you need more computing powers for to handle those transactions. So if you don't have much computing powers, then that means the transaction becomes slower and slower, which is that we don't want to happen. So this, by having this trend, it's increasing a huge demand in the AI chips as well. I'll say like processing chips, GPU processing chips for cryptocurrencies. And the Bitcoin trading volume itself is still comparable compared to the large cap stock in the US, and has grown also like exponential rate. So if just using this projection, right, the purple line, I'll say the purple line, this is where we see the average Bitcoin trading volume. If you see that the volume is still comparable compared to Apple and Square, and if you compare to the total global US equity, or compared to the, I would say like currency, it's still a lot of potential. So that's why I say like demand is still very high in terms of the cryptocurrency and everything that create a lot of demand with our semiconductor industry. So the next, as you were like a huge push in the electric vehicle as well, with a lot of um, government, a lot of countries with signing that climate accord, with want to reduce the carbon emission and a bunch of other stuff, right? And it create a lot of boost with this electric vehicle. Hence, if you see that in the 2019, right, we already got a drop, especially the cells for the gas power, which is a normal fuel and everything. So there's been drop, but electric vehicle is been increasing, and the sales have been increasing like 16%, right, in 2019. If you see compared to 2020, COVID actually accelerated those growth. The gas power electric vehicle, the sales has been dropping 15%, but electric vehicle is increasing 33%. So it's huge growth, and this is not sales just in the US. This is happening globally. So it's huge demand everywhere around the semiconductors. So and many more innovation industry that require these chips, right, of semiconductor. And if we see compared to the lot of things that happening now, which is a lot of supply shortage, if you see like in here, right, the first one, automotive industry has been the hardest hit by the chip shortage. And this is not just happen with small company. This happened with Ford, Fiat, Chryslers. So Fiat Chrysler like produce like Maserati, Fiat car, Chrysler car, and not just them. It's happened to General Motors, Mazda, Subaru, Nissan, or Volkswagen, right? So a lot of those car company, they need to slash the production because they can't deliver the car because there's a lot of shortage with these a lot of chips. There's a saying as well, like if you don't have these 10 cents chips, right? This chips, some cost is really cheap. Could be 10 cents, could be $1, could be $2. Even like you missing $1 chip, like a tiny one, you can't sell $30,000 car. So that's why like this is the importance of this semiconductor industry, right? And the next one, which is the the second news as well, the PC maker are seeing worrying shortage of chips as well as crucial part like LCD panels. And this happen with the if you know like all your smart TV, all the laptop and everything, the panels. You heard about smart TV or smart window or smart things that using the chips as well. And happening with the gaming console, as you for people that gamer, a lot of the PS5, the Sony PS5, they can't deliver to meet the demand because they can't produce as fast as they thought as well. And it's not just because they can't produce that fast. There's a shortage in uh, with the chips for to produce that PS5. So they say they're going to have that shortage until the next holiday season, which is next Christmas. So this 2021 is gonna be I'll say struggle for this Sony PS5. And apparently it's not happening just with the Sony, and apparently happening with Nintendo, happening with Microsoft as well. So it's happening a lot to a lot of company around the gaming area. And companies like Apple, Huawei, as you aware, like some of them start making their own chips and everything. So they start stockpiling chips to power their smartphone. So demand is very high, but they don't have much supply, right? And yeah, so that's mostly a lot of news around the shortage, and I'm pretty sure it will be more news coming around this area. So I'm gonna compare a few things now, right? So we got a high demand, we got short supply with from the manufacturers and bunch of other area. So if we compare this, the current share price, I'm gonna explain a little bit. SMH, the blue one, that's what I want you guys to focus on. This is the semiconductor ETF, which is a package of all that semiconductor company. So overall, from 2020, their performance is roughly around 75%. So if you look the compared to the cars, these cars ETF, this all the electric vehicle autonomous cars, is around 92% performance, right? Gamer, which is GAMR, which is the gamer, all the gaming industry ETF, performing around 97%. ARC, which is this is one of the ETF that I've been following, which is from which is ARC Fund, which is ARC Investment Fund. So this is one of the ETF, which is ARKK. This is the innovation ETF. So this is will include a lot of like innovation industry that I mentioned there. So it's coming from their PowerPoints, right? So they are performing around like 192%. And TN, which is the solar industry, is performing around 256%. A lot of those industry that we share in here is require these chips or semiconductors. And if you compare this, the share price, the performance of the SMH compared to others, if you see that it's clearly the SMH still underperformed from the other industries, right? And those industry relying semiconductor to make other company to make cells. So by looking at that, I can see that at least it's a 20% upside if you, let's say, SMH compared to this gaming or cars. So it roughly around the 20% upside. If somehow the semiconductor is mimicking around the ARKK, which is an innovation ETF, that means at least a 60% upside. So just saying that investment with the semiconductor will give you a boost of for that particular sector is around like 60% a share price up. All right. Um, few ideas. I'm not going through because of the time. I'm not going through too details in terms of individual company that I share here. Probably I'm gonna share more in-depth analysis in the next webinar. So this is ideas just going to give awareness of what semiconductor company that available out there. The first one is Taiwan Semiconductor. So I would say like a lot of chip makers are coming from this TSM, and business score is really high, and you see EPS is growing really, this net profit doing really really well. So this is one of the company that I'll say um the upside still there. Intel, some of the Intel chips start like trying to do partnership with them. So not sure the detail of that partnership, but so there's a lot of big company dealing with TSM. So this is one of the top chip makers in the semiconductor industry. And the second is where the company that I personally invested, which is Nvidia. So this company with dealing with the graphic card for gaming, and they're, I'll say, quite responsible with a lot of this Bitcoin or cryptocurrency processing power, which is them AI processing, self driving or self autonomous car. They involve as well. So this industry cover pretty much a lot of area. So this is the company that I personally invested, and I'll say like roughly is 22 or 21% from the whole portfolio with them. So it's been with them is almost 3 years or 4 years. So it's quite heavily, I'll say quite high conviction for this company in my portfolio. So like I said, please do your own due diligence. EPS doing well, there's no debt. The current ratio is where if the company going shut down, they don't making income, their cash can survive at least 7 or to 8 years. So it's doing, I'll say like very, very strong balance sheet company. So wouldn't see this going bankrupt anytime near soon. All right. So Ahmad, this is probably a semiconductor different in the outside little bit different industry. The two company that I mentioned before is all about chip makers, right? They're making chips. And the next two companies that I'm going to share this, the first one is Ahmad, Applied Materials. This is where they're dealing with the testing equipment, or the software and the tool. So you know like all the chips, all the chips that we people produce, they most likely the testing material or testing equipment and everything come from them. So Ahmad is the first one. EPS crazy, right? Skyrocket, high efficiency, and debt is still okay. I'll say like companies I'll say based on the fundamental financially, they've been doing really, really well. It's almost like everything's going up. All right. So next, which is the Teradyne. This is company that I'll say like try to disrupt a few things in terms of they dealing with a lot of with robotics and that cars company as well, Teradyne. So but this is around the testing equipment. So this is quite I'll say quite young company compared to the rest, but in terms of the numbers and everything, they're still doing well. So these are a few four companies that are in my watch list. So got Nvidia, but got Ahmad before, but already removed. So mostly in Nvidia that I got, but those four companies looks promising. So yeah. So any questions so far with those ideas? No. All right, cool. All right. So hopefully next webinar will if there's an opportunity go in depth in terms of the company that I'm personally invest to. So it's just giving you understanding of how I analyze them and how I also like evaluate or picking the switch strategy that suitable for that particular company. All right, cool. And I think yeah, that's all for all my presentation today. Just a few things that I'm gonna share. So I'm gonna make this a webinar to be regular now. So to it's going to be every third Thursday of the month. So it's a bit tricky. Before I was trying to do that every third Friday of the month, but Fridays are not many people available because third Friday of the month is when the option expired. So I just shift that a day early, which is third Thursday of the month. Cool. So the next monthly assembly will be on that 19th of March, 2021. So like I say, thank you so much for your time. If you guys have any feedback or anything that can help me to improve, let me know, or any content that you looking forward to as well, let me know so I can prepare that a lot earlier for next upcoming one. uh and yeah, I think that's all. For any questions so far, so I'm gonna probably take 10 minutes before we wrap up the whole thing. Yeah, let me know if you have any comments, and feel free to type in the chat, or yeah, just unmute yourself. Thank you, Haris. Thank you, Nila, for coming. Oh, thanks, Pangestu. Mhm. Choo-choo. Aida. Okay. Aida asking, what do you think of Intel? I did share Intel last webinar. So this is one of the company that I got, that I invested. In terms of the chart and everything, I'll say probably a bit recap, right? So I bought that quite early of the year, so or like even like last year. So in terms of the my investment thesis now, there's a hedge fund, not hedge fund, I think the activist company, Dunlop, which is invest recently to Intel as well. So they're doing a lot of, I'll say not transformation, a lot of suggestion to the Intel board members. So there's one of the things, the recent things that they happen, which is replace the CEO, changing the strategy around that regarding the chips and everything. So I'll say the upside is still there at that time, but I haven't analyzed in the current share price. But I believe from the time that I mentioned last month until now, I'll say already go up quite a lot. So you know what? Give me a minute. Let me open that. Um, uh, so I'll check quickly. Oopsie. Okay. So oopsie. It does already go up quite a lot. So in terms share price wise, I'll say probably the upside not much now. Probably around 3 to 10%. Rather than in here, I feels like this. You better use your money somewhere else. So that's my perspective for Intel, because the ups in terms of the risk of the, because there's a have a risk with the manufacturing and everything. Still, they still have a lot of risk. But with the share price is around almost back to the previous time, previous month or previous year. I'll say it's a bit risky now. Probably use that money to invest on somewhere else. Cool. I hope that clarify. Mm, all right. So got the next one, Francisca. Thanks and almost blah blah blah. Thank you for coming, Francisca. Yeah, so in terms of I didn't mention about whether I invest or not in the Bitcoin. So I did share in the my kind of in the my private Discord channel, which is with my students. Personally, I do have them, but it's just a small portion of my portfolio. So just giving example, let's say my whole net worth is like $1 million. So I only have like roughly up to like my target is to reach up to 4% of the whole my network in the Bitcoin. So now it's roughly around 2 or 3%. So not that big. I'm not sure now how much now, but that's how much I invested before. So I do have them, but it's very small portion. I believe in the future application, but mostly just around that Bitcoin, but not the other cryptocurrencies. So do have a belief in the decentralized finance, but that's a probably I'll say in terms of whether that you want to invest or not. I'll say like don't risk too much. If you see Elon Musk, if you compare with his total market cap, he only invests around like 4%. Right, so that's a big hedge fund. They invest up to like 1% or 2% of their whole net worth. So I'll say that means it's clearly that it's still a lot of risk in terms of this area. You can invest, but invest a quite small amount and the money that you're willing to lose. All right, cool. I hope that helps. Oh, on the other notes, you could play differently around this Bitcoin side. You can, let's say Nvidia is one of the industry the got impacted with the Bitcoins going up really. The volume is transaction is going up and everything's the semiconductor company will get boosted as well. Square is one of the company that quite believe in the whole cryptocurrency as well. So this one of company that you can look into. PayPal is the second one. So PayPal, Square, and Nvidia probably. All right, cool. Anything else? All right. Okay. So if nothing else, I'll just wrap up. Oops, another few questions. Thanks, Tim. Thanks for that. How about Bitcoin mining companies? Ooh, I'm not aware with. I mean, like sorry. Let me double check the question. You asking about Bitcoin mining company? Is it invest into those companies or is it you invest your money for mining the Bitcoins? Oh, uh, well, I'm not really familiar with that one, unfortunately. So tried that before, but I'm not really familiar with the way they do that. So probably better research on whether they save the probably few tips, ensure that they have history in terms of their company and probably regulated. It's just don't risk too much on that your money as well. So unfortunately, I don't have much information. Don't really know much detail about the mining company, a Bitcoin mining company. Sorry about that, Ida. All right, cool. Okay, all right. So if nothing else, I'll just say like I'll wrap up tonight. And if you have any question, feel free to reach out to in our Facebook group or in the messengers as well. All right, thanks everyone for your time and have a good night. And I'll see you guys next month. Bye bye.